question 32. The Board of Commissioners of the City of Hartmore adopted a general fund budget for the year ending June 30, 2017. That included revenue of $1 million, bond proceeds of $400,000, appropriations of $900,000, and operating transfers out of $300,000. If this budget is formally integrated into the accounting record, what journal entry is required at the beginning of the year and what later entry is required? So first, let me give you the journal entry directly. And before we write the journal entries, normally we need to write down what fund we are working on. And for this question, we are working on the general fund. Okay, so we write the general fund here. That's for general fund. And as to this journal entry, we debit estimated revenue $1 million, other financing sources from bond proceeds $400,000. So both of them need to be debit, and then we credit appropriations $900,000, other financing uses transfer out $300,000, and the last one is the budget fund balance. It's a plug-in number. So here they have more revenues than expenses, so they are going to have a positive budget fund left, and that goes to the credit balance. So that budget fund balance have $200,000. It's plug-in number. Okay, and basically this journal entry is based on this budget account equation. So in this equation, on the left-hand side, we have estimated revenues and estimated other financing sources. So those are all estimated cash inflow, and they are on the left-hand side. So remember, very similar to the basic accounting equation. So we have assets on the left-hand side. So if they're on the left-hand side, they are going to increase through debit. And then on the right-hand side, first we have appropriations and estimate other financing uses, and both are potential cash outflow. And so they're on the right-hand side, and we are increasing them through credit. And the last one is the budgetary fund balance. Its plug-in number is equal to the estimate, the revenue and other financing sources minus the appropriation and estimate other financing uses. Okay, and so that's going to be the journal entry I just gave you is the journal entry at the beginning of the year, and at the end of the year we're going to reverse the journal entry just prepared because all the accounts here are temporary account, and they are not going to show up on the final financial report. So we need to reverse the prior journal entry and to zero them out. Okay, so to zero them out, what we need to do is we are going to debit the appropriations, debit other financing uses, transfer and debit budgetary fund balance, and the same amount as we input in at the beginning of the year, and credit estimated revenues and other financing sources, bond proceeds, still the same amount as we input at the beginning of the year. So then, because they are temporary account, they should not be there in our financial statement. Okay, so that's the answer for this question.